Good morning, ladies and gentlemen. You're all okay? Yeah, good. Okay, that's what we want to hear. At least there's one awake. He's from ING, so this is how we arrange these kind of things. So, well, good morning. So when we're talking about all these business models that are here to disrupt the world and change the world, and are value-driven, and then you have this old-fashioned banker in front of you. That's disruptive in itself, right? That's quite a change. And there's a reason why I'm here, because there's quite some banks that at this moment feel threatened. And if you look at this picture, I'd feel threatened as well. And therefore, when we were reviewing our strategy 3-4 years ago, we went deep into the analysis as to what our clients were really looking for, what they were really looking for. And we asked them. We went out to 2,000 clients, consumer clients and business clients all alike. And basically on the back of the crisis, most of them said, well, we will need banking, but we won't need banks in the future. And that's why these companies, you are so successful, because you deliver something truly different. You do show a difference. You do make a difference. And that's what's so attractive. That's also why in our Think Forward strategy, we basically indicated that we want to empower people to stay a step ahead in life and in business. There is no word as a bank. There's no word of banking here. There's no word of finance in this either. But it's all about what the clients actually do with the money they get from us, or the money they put with us, or what they do in our ecosystems, because we are developing them very rapidly and thoroughly. And focusing on the primary relationship, a true client, and focusing on the differentiating experience of that relationship, that's what has to make us innovative, and that's why we have to be flexible, and that's why we have to be agile. Now, these words, innovative, flexible, agile, coming from a bank, it's probably not very convincing, is it? But we do deliver it every day. And the way we like to see ourselves is not like this big tanker that, has difficulties moving an inch because of the changing seas and this changing economy and the changing business models. We look at ourselves more like this. We see the greyhounds being agile and flexible and fast, and we see a bank strong like an elephant, but just as fast and just as flexible. And I'm sure you think, well, Ralph, dream on. You will not be able to do so. And then I can prove you wrong, because we have been able to do so. Why don't you travel with me back in time? 20 years ago, the internet revolution. There's two companies that actually made a business, a financial business, on the back of the internet revolution. One is PayPal, and the other one is ING. We've done it before. And why were we successful then, and why are we successful right now? It is because we are looking at ventures that are truly purpose-driven. And ING Direct was and is truly purpose-driven. And right here in Germany, you see it. ING DiBa is the third largest retail bank around in Germany. And we built it from scratch over the last 15 years. More than 8 million customers. The most efficient bank around in Germany. You can do it. It can be done. But it can't be done overnight, and it can't be done as part of this slow bank with strong governance. So you basically have to make sure that the way you work with these startups, you give them some space. You give them separate reporting lines. You give them the right capital. You make sure they are purpose-driven and truly customer-focused. Where they have the speed, the innovation, and the flexibility, we provide the capital and the marketing. And that's why we've been so successful. Now, clearly, this was one of those things that we created ourselves through our own thinking, through our own knowledge of the internet, and how we could truly disrupt banks. And we've done it in the US, in Canada, in Spain, in Australia, in Italy. We're still doing it. But sometimes there's better ideas coming from the outside. And you have to be open for that as well. And we are. So in 2008, we saw next to ourselves as a challenger in the German market, we saw a company also disrupting the mortgage market called Interhyp. And we acquired it. And it has been a continuing success ever since. Not because we are the owner, but the way we work with each other. It's not fully integrated, it is cherished, it is cared for, it is supported. It is supported because it does truly deliver a differentiating experience to our clients. So together with ING Direct, to be quite honest, these days we talk about fintechs. Probably Interhyp and ING Direct, ING DiBa are fintechs avant la lettre. We have actually been able to make successful, sustainable businesses out of these initiatives. Now, with that, we feel that we know what it takes to build a partnership with fintechs. And that's why we also work with fintechs in a completely different way than many of our other colleague banks. They have a big pot of money and they invest in you like a private equity. And they hope for financial returns. That's not how we work. We look at our own strategy, at our own focus, differentiating the experience to our clients, and wherever you have something that is better than what we can do, we seek a partnership. Sometimes we invest, sometimes we just cooperate, but we make sure that you keep the room to be successful. Because what you deliver is the agility, the speed, the flexibility. What we can deliver is the number of clients, 35 million, growing 1.5 million clients a year, ING, because of the challenger attitude. We have the marketing experience, we have the scale to work for you. And if together we use your strength and our strength, you win, we win, but in the end, truly, we can transform banking going forward, and then there is one winner only, and that's the customer. And that's what we do it for. Thanks very much.
Thank you. Let's wait for some presentation. There it is. Ralph talked about Interhyp, and in the next few minutes, I'll present to you what Interhyp is all about. We started our business in 2000, the same way that many fintechs start their business today. We believed the mortgage market in Germany is far too complex. Far too complex for normal retail clients to find the best mortgage without any help. We believed this market needed far more transparency, and we started working on it. Today, we are the #1 mortgage broker in Germany. What we do is servicing our clients every day with a platform of over 400 banks, and all the major banks are nowadays included there. So also the traditional big players like, for instance, Deutsche Bank, Commerzbank, many Sparkassen, many Volksbanks, all included on the platform. What our systems do, and our employees, is making the very complex German mortgage market far more transparent. Having a great idea and a product that clients like is a good start. But you need more. You need years of really passionate execution to get where we are today. Today we are really the #1 mortgage broker in Germany, and that's because we really focused on clients that are happy. And we are really convinced that you cannot have happy clients if you don't have happy employees. And that's why we believe it's really of big business importance to be a great place to work. You need employees that are 100% committed to be able to generate clients that are really satisfied and are also your promoters. And by the way, that's very efficient because having lots of promoters is far more efficient than spending the next million on marketing. Back in 2000, we thought that we could really get big in this market and really have clients that were very happy with local or without any local presence. We thought we could really make a difference with internet and telephone only. And it worked very well. In the beginning, we were able to get 1.something% of market share. But then we learned if we really wanted to get big, we had to get local. And that's what we did. We followed our clients, the wish of our clients, because the clear wish of our clients was to get local, personal advice. Yes, personal advice from real people with good old brick-and-mortar locations. We listened to our clients and we opened up 100 locations in Germany. And it served us well. Our client satisfaction went up considerably and we also got far more referrals. So clear example of a triple win. Happy clients, happy employees, and returns that make ING shareholders happy. Talking about returns, last year was our 16th year of operation. And we were able to grow our volume, our mortgage volume brokered, with 44% in 1 year. Last year we were able to double our profit to 58 million euro. And we only have 6% market share. And as most people in this very complex market, most other players only sell their own product, we are convinced that our best years are yet to come. Thank you.
Okay. Now, as a story, we cannot leave it like this, right? Because normally, when big company buys small company, management disappears. Here we had a new management team coming in. That's not unusual, but I've never seen an EBITDA from the point of the acquisition of champion buying challenger growing 4 or 5 times. Now, there was, of course, the recovery in Germany, like in every other European country, in the mortgage market, but still it's an amazing achievement to keep the market share and growing from 12 to 60 million euro EBITDA. Now I would love to do some Q&A, and you know, when you look at Check24, which is one of these big German companies, they started in one vertical, which was car insurances, and today they're in many verticals. And I think the latest one they launched are loans, very close to mortgages. It's just not for houses, but for other things. Michael, have you thought at Interhyp, which is one of these great internet companies which made it through the recessions, have you thought about launching other verticals?
Yeah, you can imagine, 16-year-old company. We thought about extra service for our clients a lot of times. And we also listened to our clients, what kind of products they like. But what they played back to us most of the time is that they really like our focus, our independency, that we don't try to sell an extra product on top, and that we just go for the best deal. And we don't exclude that, especially if we get bigger and bigger, that will be more economical also for us to consider other products, but at the moment we do very fine with that focus and such happy clients.
Yeah, I mean, as an internet guy, I like to draw a parallel to the gaming, online gaming space, where companies like BigPoint or Supercell or Gameforge, they have a user base who play games, and then when they launch a new game, it's already tough to develop a game, but then to acquire the customers, the users, is the second tough part. So they cross-sell their games, and since you have a trusted customer relationship, and I guess in most cases the people still pay the interest, so you have kind of an ongoing relationship, you could try to offer other products. I find this very, very interesting. Well, I guess you first grew mortgages and then you have room to go into the other verticals.
And 6% market share, it's not a lot yet.
6% market share. Okay, we come back to that question later. But, so Ralph, yesterday we had the CEO of RWE sitting here, and they acquired a company in Silicon Valley, and I asked them, what do you learn from each other? And Peter said, you know, we're a very big company. They went from 80 billion to 8 billion. They lost to zero because of regulation, very sad. Yeah. It's going back with it because of digital. But Ralph, you have shown the market that ING can reinvent itself as continuously, and not only true with Interhyp doing a digital acquisition, but I think in Germany you've done ING DiBa, etc. How do you keep your organization always on tip of their toes, being ready to kind of reinvent themselves?
Yeah. Well, actually, it's hard and it's not hard. It's hard from the perspective that, you know, if you're growing bigger, you may become lazy because certainly as a bank, you have a balance sheet, and that balance sheet produces income and produces profit while not doing too much. So the risk is that you become lazy and that you have a subsidy from the past in your balance sheet, not to be very agile nor attentive to the future.
Are you describing Deutsche Bank right now?
No. Those are your words. But for us, it has come quite naturally to always look at what new technology can do. Certainly with our history, even in Holland with the Postbank, where basically we were the bank that made people banking at home rather than that they had to come to the office. And we have always been thinking about how do you empower people to do stuff themselves? How do you make sure that they trust their own decisions, that you give them the right information, that you use the right technology for them to feel in control and to feel empowered to make these kind of decisions. And if you have that as your purpose, which is what we have, then you have to constantly be on the lookout for, is there new technology out there? Are there new players out there? Is there new business models out there that we should use to improve the differentiating experience? Because our strategy is about the experience, not about the product. Retail banking, for example, there's 5 products in retail banking. They have been like this for the last 100 years, and they will be like that for the next 100 years. So you shouldn't tweak the product, but you should influence the experience. And how the easier you make it, the better it is. So we keep to the lookout, and wherever we see developments that we can implement ourselves, we will do so and disrupt ourselves, which is something not so easy to do, to disrupt yourself. But honestly, given the fact that we truly understand what's happening out there, we better disrupt ourselves before somebody else does it. And either we do it ourselves because we have the technology ourselves and we develop it ourselves, or we do it with a player that has a superior technology or speed or model for us to disrupt ourselves. And you shouldn't be afraid of that. You should never be afraid to do so, to improve yourself going forward. So the culture that we have from that perspective is what we really cherish, and that's what keeps us on our toes. And by the way, that's also why, just going back to your first question, that's why we talk about cross-buy and not about cross-sell. Because it's only so easy to start thinking like an old-fashioned bank again, to think, well, okay, so I have this customer relationship and I have this opportunity and maybe I slip in another product.
That's what we did with the Berlin conference.
And I don't like exactly. But that's not how you should do it. If the customer's in the lead, they should be convinced about their own needs and what can satisfy that need. And therefore, it's their active decision to do more with you rather than the fact that we try to be, smart and slip in something. Now, clearly, there's a real need, you should do so. But for us, given the fact that we basically give the lead to the customer, we talk about cross-buy and not so much.
Okay, so let's talk about that.
Yeah.
What are the buys you're interested in fintech? I heard you're identifying the needs. So, what comes to mind? Is there something out? Should the M&A bankers be alert on something here?
Well, I can only give you the latest things that we've done. So on the insights, we have developed our own peer-to-peer payment platform, which has taken off very, very successfully in Spain, going to 250,000 customers in 6 weeks. And basically, it's bank neutral. So basically, we're attacking again the establishment there, and we already have 3.5 million customers in Spain as a direct bank. That's what we do ourselves.
How many customers you have outside of the Netherlands?
Outside of the Netherlands, we have 26 million customers.
And that's more than the Netherlands, where you have a population
of
like 15 million?
Yeah,
and
exactly.
then you have 4 million accounts?
No, we have 8 million customers in Holland.
Okay.
But we're already same size in Germany, and in Germany we're growing 1,000 customers a day. 1,000 customers a day. In Spain, we're growing 500 customers a day.
And why you win? I mean, that's a question which has nothing to do with internet. But how do you win these customers? Why do you win them?
Why do we win them? Because I think we stay true to our purpose of making banking easy and transparent, and not doing things they don't want, not charging fees that you can't explain, and that delivers a real good experience to our customers. So in all of these countries in which we're so successful, we're focused on the Net Promoter Score, which is basically your client advocacy score. So how happy are your clients, and are they so happy that they actually are the advocate for you to recommend your business, Interhyp, ING, to their friends and family. And that's what's happening right here in Germany. So the number one, we always look at, are we number one in Net Promoter Score? Which means, do we truly deliver a differentiating experience vis-a-vis the other competitors? And what you will then have is you will have this automatic flow of clients coming in, and that's what's happening.
That's very organic growth, but you started
organic.
with M&A. Are there companies you want to buy?
So on the M&A side, so basically where we have felt that we should develop skills with people from outside who have shown to have a superior model from what we have. I can just quote the last 2 investments that we made in fintechs. The first one is Kabbage. Kabbage is a US fintech, very successful in algorithmic credit scoring for SMEs. Now, clearly, in the markets in which we are a direct bank, we don't want to build an SME strategy by opening a branch next to every church in every town. It's a very expensive strategy to follow. But that's kind of the normal strategy to follow. So we do it through algorithms in a direct way. Okay. That's Kabbage. And the other side, the other thing that we just did is we made an investment in WeLab. And they do the same, but on the consumer lending side, pre-scoring consumers. Okay. So it's
we're a little bit out of time, but I'm adding a question because I'm really interested in it. So you know the concept of unicorns, right?
Yeah.
So I think there's a unicorn here which didn't make the Forbes list. Now, as you have 40 billion euro company, why wouldn't you sell a little stake to a venture capitalist at $1 billion+ valuation? And then you are one of the few champions on this world, maybe the only one on the 187 unicorn list from Forbes which owns a unicorn. Have you thought about that?
I'll go back. We were one of the first investors with 25% in PayPal, so we were there.
You sold a bit too early. That's a German phenomenon.
We sold them when
like
they were a unicorn, so we sold them in 2005 or 6, I think, to be quite honest. I will give it some thought.
Okay, well, if you need help and not just thought, call me. So how does that work? I learned, Michael, you were running the German business of ING, and then you got a call. How long are you at ING for?
18 years.
18?
Yeah, so elephant.
Oh, wow. So in my world, on the M&A side, working with people who grow companies to where Michael does it, they're quite owners. You own 100% of the company, as far as I understand.
Interhyp, yeah.
Of Interhyp,
yeah,
right?
Yeah.
How are you? I mean, this is entrepreneurial skills within this super bank. How are you doing this? I mean, what's your tricks?
I think that's really the strength of ING, that ING gives the room and the freedom to do what's good for the client, of course, ING.
But hold on. Let's go straight to the question.
Yeah.
Less about ING. I want to talk about you.
Okay.
I worked for Lehman Brothers for 12 years, and after 12 years, I was heavily brainwashed, and I felt like 1 out of a million, right? And to make jumps, it really needed a bankruptcy to set up NOAH, etc. You're doing it within ING. Do you have like a magic team in Munich, and are these the ones who were there before? Because you're doing really well.
Yeah, I talked about a great place to work, and I believe that people who come into the door every day being happy and really willing to make the difference for clients, but also in the team.
So it's great, but attitudes, team spirit, and a bit of luck then probably. Like
a bit of luck is always there.
Forcing innovation as well. I think Michiel is far too modest, and that's, it's kind of. So I think what he's doing with his team is incredibly successful, and it hints on what he has as an entrepreneur spirit. You keep it separately. It's not in Frankfurt. It is in Munich, so it is not close to ING DiBa. It is related to DiBa, clearly, because we do work together, but he has the kind of the objectiveness towards the clients, because he does advise mortgages of other banks as well, which is what the clients really value. And then within ING and within Interhyp, we have this constant flow of new ideas of innovation coming through innovation boot camps.
How often?
And that is how we continue to.
How often you two speak?
Well, we speak about 2-3 times a year.
A year?
Well, it's a year. Yeah. But he's in Germany, so he works with ING in Germany.
So you really let him be.
Sorry?
You let him run his business, and you don't.
That's what it is.
Well,
so
look, I mean, I have to say, we have to give a standing ovation for how champions could work with challengers with great results. I think you own it now for 8 years, maybe.
Yep.
I wish you a wonderful next 8 years, and I hope to have you guys back at NOAH. Thank you so much.
Thanks a lot.
Very impressed.
Thanks, Marco.
Thank you. Thank you.